Sean Eddings here. Welcome to another edition of the Microcap Club Member Spotlight. In these interviews, we showcase many of the talented members on Microcap Club. Today, we have Mathieu Martin, Portfolio Manager of Rivemont Investments Microcap Fund. Mathieu, thanks for joining.
Hi, Sean. Thanks for having me.
So tell us a little bit about your background and what you're doing today. I remember, you've been a Microcap Club member for a while. Weren't you like into poker at one point, and then private investor for a while, and then got to where you're at right now?
Yeah, exactly. So I have a bit of an unusual background. I didn't go to college. I didn't study in finance. No finance or accounting background. I just worked for both my parents are entrepreneurs, so I worked for the family businesses when I was younger, up until my mid-20s, and I started playing poker on the side, and was fortunate. So I had some savings. Didn't know what to do with them. And at the time, I had a friend, Philippe Bélanger, who's also a Microcap Club member, and he started investing in microcaps about a year before I did. So he just told me about the strategy, why microcaps are attractive as an asset class, and I just said, let's try it out, let's experiment. So I started investing my own capital, doing lots of mistakes initially, because honestly I didn't have any idea what I was doing. But I started reading books and talking with other investors, trying to learn as much as possible. I'm a big self-learner, so when I put my energy into something, I'm just really focused and dedicated to learning more. So did that for a few years. Kind of became a private investor for a few years, and then at some point, Philip and I were wondering if we could maybe start a fund and pool some outside capital, mostly from friends and family that were kind of looking at what we were doing, and we were generating attractive returns with our personal portfolios. So they wanted to get in on this strategy. So we partnered with an asset management firm here in Quebec called Rivemont, and Rivemont gave us our chance to get started in the industry. So they hired us as consultants for a microcap fund that they would be launching and managing, and our goal was to provide the investment ideas. We would recommend stocks for the microcap portfolio. So we did that for a few years. And on the side, I went and got my CFA designation. So again, very unusual, because typically you need to have a college degree to enroll in the CFA program. But I did it without any educational background, passed the 3 exams, and got my CFA. So now after that, I was able to join Rivemont and become a portfolio manager of the microcap fund. So that's what I do full time now.
Very nice. So you mentioned earlier that you come from an entrepreneurial family. What was the business or businesses that you were surrounded by when you were growing up?
Yeah, well, it was like very, very small businesses. My father had the medical equipment business, so he would sell, hospital beds and like all the accessories for disabled people.
Yep.
So I did, first I was a delivery guy, and then I worked in sales, and then I managed a new store that he opened in Montreal. So I touched a little bit of everything in terms of business. And my mother is an accountant, so I kind of had like a very, very minimal like accounting background from that side, but like very, very limited.
Were there any things that you learned or picked up on being surrounded by them?
Well, actually, my father, his business was mostly, he would buy equipment from large manufacturers and sell it in a store. And after a few years, I realized that there was really no competitive advantage in that business. Like you're just selling the same things as everyone else. We would kind of differentiate with the customer service we would offer, but otherwise, like people would just shop for the best prices. And we were in the suburbs of Montreal, and there were some stores in Montreal selling for cheaper prices, so people would just go to Montreal and buy cheaper. So I just realized that like having a store, brick and mortar store selling kind of commodity products is a very tough business. So that was kind of a lesson of what to avoid.
So on that topic, what would you say is your investing strategy? What would be the things that you would be looking for in terms of microcap companies?
Yeah, for sure. So in terms of criteria, I'm not trying to reinvent the wheel. It's pretty straightforward. What I look for are high growth, high quality companies, and I just try to find them very early in their public market life cycle, if you will. And it doesn't mean necessarily that the company just went public, but maybe it's a turnaround, or it's a company that was their product was too early to market and they struggled for several years, and now it's kind of taking off. So I'm looking for revenue growth, profitable or close to profitable, with a good balance sheet, good management team, and some form of an emerging mode. I want to see some competitive advantages. So nothing special here. But the secret sauce, if you will, is that I try to find them below 100 million in market cap, when there's no institutional ownership, no analyst coverage. It's very liquid. It's very lonely. It's just like a pool of retail investors trading these stocks. And when I find something misunderstood, I buy a position, and then the company executes well. At some point it becomes larger. It comes on the radar of larger institutions. So you see multiple expansion. You see the liquidity improving over time, and that's kind of the recipe for multi-baggers.
Yeah, and you have access to CDAR. It seems like it's getting worse and worse.
Yeah, exactly.
What's the secret? Is there some other access to public
There
information
is.
that you
There is actually I use Stockwatch. Stockwatch basically takes all the filings from CDAR and puts them in a more user-friendly format for people to browse through. So actually, one thing I do, and it's probably something you would want to touch on later, but how I source the ideas is actually using Stockwatch. So Stockwatch has a feature where you can search. It's called New Search. So you can see all the new filings, like press releases or financial statements for Canadian companies, and you can search with some filters. So what I do is I filter, like every day, every morning. I go to Stockwatch and I look at the previous day's filings, and you see all the headlines on the press releases. So it's typically 200 to 600 filings per day. I skim through all of these every day, looking for a headline that might catch my attention, or maybe a company name that I've never seen before. And that way I can't miss anything, basically, because I look at all that is happening on the Canadian market every day. So I'm very focused on this market, Canadian non-resources companies, and I try to be the big fish in a small pond, if you will.
and having the poker, or that background, what are some of the things that you learned from that and have brought that to your investing?
Well, I think managing your emotions is a really big thing that I learned in poker, because poker is a game where, in the long run, if you make better decisions than other people at the table, you can be a long-term winner in the game. But in the short term, day to day, there's a lot of luck involved. There's a lot of volatility, and you can make a good decision and have a bad outcome. And it's pretty similar to what you experience in investing. You can do the research properly and make an educated decision to invest in something, and it turns out that the outcome is not what you expected, and can be due to bad luck. So managing your emotions through these swings, through this volatility, is very important. Also, managing your bankroll. What in poker we call it the bankroll. In investment, it's managing your portfolio, sizing your positions based on risk and reward expectations. So those are very important as well. And yeah, I think those would be the main lessons I learned from poker.
And in poker, in terms of sizing your bet, would you just do based on gut feel in terms of the risk reward, or did you have any other thought process surrounding that?
Well, actually, it's more a matter it's not about sizing the bets in a specific game. It's more about when I enter a table, I enter a tournament, or I enter a cash game table, how much money will I put on the table or in the tournament in the context of my overall bankroll. So typically, you don't want to risk more than a few percentage of your bankroll on a given game, to make sure that, sometimes you have a bad day, then you have a bad week, maybe you have a bad month, but you're still in the game because, maybe you lost like 20 buy-ins, like the buy-ins, the amount you put on the table. Maybe you lost 20 buy-ins, but you were playing with 40, 50 buy-ins in your total bankroll. So you're still in the game to see the other side of that volatility.
And would you say if you were at a table of individuals who you felt had very low skill within the game of poker, maybe you could up your bet a little bit more compared to what you would do maybe if you went into like a competitive tournament?
Yeah, for sure. So in poker, you're always trying to exploit. Since you're playing against other players, you're trying to exploit inefficiencies, similar to what you would do in investing. So you're always trying to gauge, who's at my table. Are they good? Are they bad? If everybody's good at the table, maybe you want to switch tables, or you want to find maybe a tournament that there are a lot of bad players in. So, for example, I would go to Vegas every year for the World Series of Poker, and in Vegas there are a ton of recreational players. So I played once. In my last year, I played the main event of the World Series of Poker. It's $10,000 buy-in, and I would sit at the table, and there would be like 6-7 people out of 9 that are almost clueless. Like it was crazy. So those are the kinds of games you want to play, and that's what I saw in microcaps initially as well. Like, you look at microcaps and it's just like retail investors, people do this part-time, they don't have any financial knowledge, and that's how you get all these mispricings on some stocks.
Awesome. Thanks for sharing those insights, because I've always thought of poker being a really good analogy, especially for microcaps, just going to the table with the people who are drunk and dumb, right?
Yeah. No, exactly. It provided, it was a great experience for me before transitioning into investing full time.
Mathieu, so at the current stage of where the market's at right now, are there any big ideas or things that you're really thinking about right now?
Well, actually, one topic that's been very interesting to me lately is the number of microcap acquisitions that we've seen, specifically in the Canadian microcap market. So in the last 9 months or so, there have been approximately 15 different acquisitions, and it seems like it's been accelerating a bit lately. Last week, for example, there were two acquisitions. So what I'm seeing is that U.S. private equity firms are coming now to Canada to buy these small technology companies that are very undervalued. So to me, it provides a validation that companies are attractive. Smart money is coming here to buy these assets, and they're trading on the cheap. So I think that kind of put a floor on valuations, even though we've had a big decline in microcaps since early 2021. Seems like the acquisitions have put kind of a floor on valuations, and now we're seeing stocks starting to move again. And also, when you get a company that's acquired, shareholders get an inflow of capital. They have to redeploy it. So typically, they look for similar opportunities. So if high growth SaaS company gets acquired, typically the capital will be redeployed in other high growth SaaS companies. So it's kind of lifting all boats right now, and it's been very interesting to follow. And I feel like valuations are still cheap, and I'm hoping that public market investors will realize how how many bargains there are right now and re-rate these stocks eventually, because otherwise they will just all be taken private, and it's going to be sad for me as a public market investor.
Yes, that would not be good to have all of the microcaps now privatized, and then are you left with our small cap, mid cap, and large cap?
Yeah, well, and actually, the companies that get acquired, typically it's the higher quality ones. So it's kind of unfortunate, because now it feels like we're going to be left with even
Crap.
more junk than there was before. So that's a bit unfortunate.
So you've been a Microcap Club member for a while, Mathieu. What are some of the things, about the club, if there's been value that you've gotten from it? If you speak upon that, that'd be awesome.
Yeah, for sure. So I've been a member of the club for several years, and I met so many great people through Microcap Club. I attended the Microcap Club Summit many times. Before the pandemic, I think I attended all editions, and it's been awesome. Like the quality of people that participate in this club is just like off the charts. And also it's an idea generation tool. I follow the Canadian market very closely, but sometimes I can miss a few opportunities here and there. So being part of the club and having other people doing research and profiling new companies is always a great tool also for idea generation.
Awesome. Is there any other places online that people can reach you at, Mathieu? I'll share your Microcap Club handle below, but if there's any other places, we love to share that.
Yeah, well, actually, I write a Substack newsletter called Stocks and Stones. So it's stocksandstones.substacks.com. You can follow me there. You can subscribe. I publish about one article per week talking about the Canadian microcap space in general, and also about some of my trail running adventures, because it's another thing we didn't talk about, but I do ultra trail running. So
what's the longest? Are you doing 50 ultra marathons, or are you doing more? Longer?
Yeah, well, actually, the longest I did so far was a 50 miler.
Yeah.
Or 80 kilometers for Canadians. But I'm training this summer for about 65 miles race in the mountains here in Quebec. So I write a bit about those adventures as well in the Substack newsletter.
Well, I should definitely subscribe to that. I've run 6 marathons.
Oh, really? Wow.
Yeah, and I mean, just that experience. It's a little less, of course, half or maybe even less than half of what you're doing, but I definitely see parallels between doing a long distance run and dealing and managing with the physicality and the mental challenges, really, that come about with running, and it definitely helps with a long-term investor mindset.
Yeah, no, for sure. I totally agree. It's a great way to test yourself and build some resilience, which is a much needed skill in investing as well.
Yes.
So,
on that note, I really appreciate you taking the time out of your day, Mathieu, to chat. And I look forward to getting to know you a little bit better. And if there's any other members, subscribers, or anybody else who would like to reach out to you, feel free to do so.
All right. Thanks a lot, Sean. Thanks.